Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm going solo again to talk about how you can use the Zacks Rank to find the top stocks, those hidden gem stocks that are out there. It's gotten a little bit difficult here with the coronavirus crisis to find good stocks, ones that have good fundamentals, because there are some out there right now that do. And I'm going to talk about how you can find them using the Zacks Rank. And I got a lot of tweets after I did my last couple of podcasts because I did use the Zacks Rank in both the Value Investor podcast and the Market Edge podcast to find some top stocks in there. And I wanted to reveal some of the secrets of the Zacks Rank as well. I said in one of the podcasts I would do so. So in this one, I'm going to combine the concept of how to use the Zacks Rank with the secrets of the rank to take a look at how it works, how you can find some of these top stocks, and then putting it to use. So I'll be giving some examples of the secrets here as we go along. Now, there are some weird quirks in the Zacks Rank. I've talked about them before on prior podcasts with Shiraz Mian, who's our director of research. We've gone over when it works, when it doesn't, again, weird quirks and peculiars that are in the rank. I'm going to cover a little bit of that again today in this podcast because it's been a while. And I know there's a lot of newbies to the Zacks Rank, and you might not have heard the other podcasts. So it'll be good to hear what those things are. And for those of you who are using the rank or have listened to the other podcasts, this is just a refresher for you on what to look for. Now, I've been using the rank for 12 years now, and I was a little dubious when I first started using it. And I was like, sure, this rank thing, all right, fine. I'll look at it. But now I'm pretty much addicted to it. And yeah, it's part of my job still, but I pretty much use it every day to look and see what's going on with the earnings estimates and which companies have the good earnings estimates. And right now, like I said, during this kind of crisis, during the coronavirus, where everything is being cut, all those earnings estimates are being cut, guidance is being withdrawn, no one knows anything anybody's going to earn this year, it seems, here in 2020, that the rank can be a important tool you can use, and it's working pretty well this year, I have to say. So I'm pretty excited to be using it again, even this year. But I'm going to also talk about when it's not working so well. So what is the Zacks Rank? Let's start there, because some of you, again, might be new to what it is. And so I just want to give a little refresher about it. Now, if you want to dig in deeper, I know some of you really like these kind of strategy system type of trading. You're very system oriented in how you're trading. So you can go find out more on Zacks.com. Go look under the education tab on Zacks.com. It's kind of up at the top. You'll see like stocks. I think they might also have it under stocks, but also under education. We have a whole page about what the Zacks Rank is, its history, all of that, but I'm going to cover it real quick here. So it is a short-term stock ranking system. It was created by Zacks founder Len Zacks back in 1986. So it's been around a long time now. It has a track record. We have back tested it, all of that stuff. You can find that on Zacks.com. Go there. Check it out if you're interested in all the details. There are 5 rankings to the Zacks Rank using the numbers 1, 2, 3, 4, and 5. The highest rank is the number ones. So Zacks Rank number ones are the strong buys, as we call them. Now, right now, I ran the screen, and there are only 215 Zacks number one rank stocks right now today. So there's not many of those. That's why they're the best of the best. So they're rarer. I screen for the number twos, which are just the buys. These are also good, and there's 649 of those today. Screening for number threes, those are the holds, And there are 2,521 of them. So that's the biggest category the number 3 holds. And then getting into the negative side, the number 4s are the cells. There are 656 of them today. And the number 5s, the strong cells, those reflect the opposite of the number 1 ranks, and there's 236 of them. So 215 number 1s, 236 number 5s. It is like a bell curve, and the number 1s and the 5s are both fairly rare, as you can see, because this covers several thousand stocks are under the Zacks ranking system. So if you get those 1s or the 5s, somewhat rare. Now, again, the vast majority are going to be in the middle of the number 3 holds. Nothing wrong with being a hold. And I'm going to talk a little bit more about that later on in this podcast, about the 3s. And another important thing to understand is that the rank is based off analyst earnings estimates and how they're revised, any kind of revisions to those estimates. It is computer generated daily. So I don't want to get any tweets about how one of our Zacks analysts has downgraded your stock to a 5 strong sell or even a 4 sell, because it's not an analyst doing it, it's the computer doing it. And we're getting in hundreds, thousands of analyst estimates into our database to tabulate the rank. Literally during earnings season, it's like madness, as you can imagine. So a lot of data going into it, and the computer is spitting it out. And again, because the analysts are the ones that make up the rank and it's their revisions, this rank is only meant to be the short term. It's just 1 to 3 months. And I get a lot of questions on that, like, why can't I use it longer? Well, the reason is because, understand, the analysts are revising their estimates pretty much, every quarter. They're going to get the new earnings report in, and they may cut, raise, maybe not, maybe they're just holding, but stuff is going to happen almost every 3 months, give or take. So that's why the rank reflects those constant changes in the analyst revisions themselves. So I still use it to screen for long-term investing, but it is meant to be the short term. So keep that in mind. If your favorite stock that you've owned for 10 years now is a Zacks rank number 5 strong sells, don't send me the email or the tweet saying, like, how dare you, like, this is a great company, blah blah blah, because it very well may be. But if it has gone to a 5, something is happening with those earnings estimates, because it's not easy to get to a 5. You got to have a lot of cuts to get to that 5, because there's not many of them. So let me dive in on the secrets here. Now that we kind of know what the Zacks rank is and what it's based on, and that it's computer generated. So the secret number 1 that you have to know if you're using the rank, and this comes in handy, is that the rank really looks a lot at the agreement of the analysts. Are they all cutting? Or are they all raising their estimates at the same time? That can tell you a lot about what's going on with that company. Now, one caveat is, if it's a small cap company, you might just have one analyst and one earnings estimate on that company. And we have a lot of them on the rank. And so it's a little easier for them to get the number 1 rank with the small cap, because fewer analysts, easier to get agreement there. If you only have one analyst and he or she raises their estimate for the year, then you may get the Zacks rank number 1 on that, because they're in agreement with themselves, right? So that is still bullish because they're raising it, not cutting it. But I like to look at companies where there's overwhelming sentiment to the upside. So there's many estimates, many analysts are all in agreement and all raising at the same time. That's pretty powerful, right? Because they're all sitting in their cubicles in their offices deciding, I underestimated this company, or maybe the company just came out, they beat and they raised on their earnings guidance. If anybody's giving earnings guidance these days, maybe some are, and maybe they did that. So all the analysts have to raise their estimates. That's pretty strong. So those are the ones I like to look for under the Zacks #1 ranks. And an example of that right now is Activision Blizzard. ATVI is their ticker. They are a Zacks #1 rank, strong buy. They're heavily covered on the street. It's a popular stock, right? The gaming guys, popular industry. Zacks has 14 estimates now for the full year 2020, and 12 are up in the last 60 days. Now, I took a look to see when they reported earnings. It was May 5th, so we're past the 30 days. I'm recording this on June 9th, so it's past 30 days. So within the last 60 days or right after that earnings report, something good happened. It wasn't as dark and gloomy as they thought, and they were all raising their estimate for the year. Now, none have cut, so that sends a powerful message. All these analysts are raising, none have cut, strong agreement. And one analyst has actually gone ahead and raised again in the last 7 days. So well after the earnings report, someone else is getting a little more bullish again, and they also have raised. So that's a bullish story there with Activision Blizzard. This is what the Zacks Rank #1s are designed to uncover, right? The something good is going on, and you should be paying attention. Now, you can see what is going on with the estimates that I was just talking about, where everybody's raising or cutting on Zacks.com. Put in the ticker, go to the detailed estimate page on Zacks.com for that ticker, and you will see it all laid out there in the 7-day, the 30-day, and the 60-day window, who is in agreement and where the estimates are going. A second example of the power of the #1 rank is with Dollar General right now. Dollar General, ticker DG. I was kind of surprised to see a retailer on the Zacks Rank #1 list. But some of these essential retailers have been killing it, right? On the food side, toilet paper, paper towels, hand sanitizer, all that stuff that they've been selling. So Dollar General, one of those, they reported earnings on May 28th. So that is within the last 30 days because this is June 9th. And we have 11 estimates up during that window. So they reported, it was better than expected, 11 estimates were raised, none were cut. Again, just like with Activision Blizzard, they're all in agreement. The earnings estimate did jump up to $8.11 from $7.46 just 30 days ago. Not many companies are having rising earnings estimates right now, so Dollar General is one of those. Also, I tell people this little side tidbit about the number of estimates that's on the page. Don't equate estimates with analysts. We have on Dollar General, for instance, 23 full year estimates, but only 11 of them were up in the last 30 days. So those are just the estimates. So someone might have been, revising their estimate outside of the 30-day window. And that's how we got the 23 in there. But that does not mean there's 23 analysts on it. But this does indicate that there's a big chunk of analysts covering this company and making the revisions. So just keep that little tidbit in mind. And let's move on to the secret #2. Okay, I talked about the #3s earlier in the podcast, and I talked about how so many on the bell curve type of shape are in that #3 category, which are the holds. And basically, most companies will end up at 3 at some point. They just will. They're going to go there. Although I'm surprised Activision Blizzard, they're still hanging on to that #1 rank. That tells you how strong that is with that agreement. And in the Zacks rankiness is very strong with Activision Blizzard, but most will fall back down, will end up at the #3s, and that's okay because the holds are fine. And, it doesn't necessarily mean that the estimates are being cut or something bad is going on in the estimates. But I decided to take a closer look at a couple that were going on with the 3s to kind of see what was going on there. So take a look at JP Morgan, one of the big banks. JPM is the ticker. They reported in mid-April now. So it's been a while since we actually heard from them. And they're reporting again on July 14th. So this is June 9th. That's just about, less than a month away now is when the next report is coming. So their rank has been all over the place. It dropped initially off of their last earnings report, which is now, 2 months ago. And now it has stabilized, I like to put it, back to a Zacks number 3 hold. And so I looked at those earnings estimates. So 8 estimates were cut on JP Morgan in the last 60 days. And then just 1 was raised also in that time period. The Zacks consensus has declined to $5.13 from $6.92 in that time period in the last 60 days. So I believe JP Morgan was a 4 or 5 after they reported their earnings. Those estimates were all basically mostly cut. There is 1 that was raised for whatever reason. But mostly, most of the analysts are in agreement on JP Morgan. They are in most of the banks. We know who, is seeing those earnings having to come down from the last earnings reports. So this is not a surprise, but it has now stabilized at a Zacks number 3 hold. Now, I did take a look at some of the stocks and the industries that have been hit the hardest during the coronavirus crisis and with earnings estimates cuts and all of that. I looked at some of the airlines, the cruise ship stocks, and those types, and surprisingly, or maybe not, they're mostly number 3 holds now. And that's because, again, just like with JP Morgan, they reported a while ago. No one else is cutting the earnings estimates here. So they were bad Zacks ranks, weeks, months ago, and now they've stabilized at the number 3 hold, waiting for the next earnings report to come in. So keep that in mind when you're looking at the number 3 holds. It doesn't necessarily mean it's good. It doesn't necessarily mean it's bad. It's just, it's on hold, basically. Okay, secret number 3 is that the Zacks rank can get volatile just before the earnings report comes out. So I had to search around for an example for this one. I thought it would be easy, but all the names that I remember seeing that were number 4s have now gone to number 3s that are just about to report. So I finally did find one, however. Korn Ferry is the company, KFY. They're about to report again. And right now they're a Zacks number 4 sell. So I took a look at the estimates thinking, are they being cut? What's happening there? And the last estimate changes were 2 estimates that were cut, but within the 60-day window. And there's been no other changes. None have been revised higher. Nobody else has cut more recently in the last week or month, nothing. So why is this a 4 sell? Well, they're about to report. Those old analyst estimates are getting a little old now. They're from last quarter after that last earnings report. And under the Zacks rank, those start to not matter as much. The rank doesn't like them. They say, that was 2 or 3 months ago. Tell me what's happening now. So it starts to discount and basically not even consider those. So you will see some stocks suddenly fall to a 4, usually not the 5 without any estimate cuts, but you'll see a 4 right before earnings. And I always tell people, don't be alarmed if you own that stock, don't panic. It's a little quirk in the Zacks rank system that when some of those old estimates do kind of age out, it'll go to that 4, but you're about to get earnings again. So I always hold on into the earnings report if I like everything else going on with the company, and nothing else is being changed in those earnings estimates. So keep that in mind. That's a secret number 3. Korn Ferry, KFY is the 4 sell right now, but they're looking at 268 is the Zacks consensus for the year. It's only down 10% from 278 within the last 60 days. And they are a consulting firm that does a lot of staffing and things like that. So this could be an interesting one here in 2020. I wanted to do why also the power of the Zacks number 1 rank versus what a Zacks 3 can look like when there is actual conflict among the analysts. So some of the threes you'll get are like JP Morgan, where it was a 4 or a 5. Nobody else has cut or done anything. It's kind of stabilized, so it moves into the number 3 hold category. That makes sense. But others are genuinely kind of Zacks number 3 holds because the analysts are conflicted. So I found one of these too. They're going to be reporting soon. Darden, DRI is the ticker there. There are 6 estimates that were revised higher in the last month, and then 3 that were revised lower. The Zacks consensus is actually on the increase because you have 6 of those analysts all revising higher, and it's up to 258 from 232 30 days ago. So that's a positive thing, but under the Zacks rankiness, it's not enough because you have this split, you have disagreement among these analysts on what's happening with the direction of the earnings right here. And so with restaurant chains right now here in 2020, as we know, no one really knows anything. We get updates from them. They've reopened. We know, that's been going fairly well, but no one really knows. And it's a lot of the companies have been saying day to day, they too have no idea what next week may look like. And so for the analysts, it's really difficult to be confident in any kind of restaurant stock, retail, anything that was shut down. That depends on the consumer here. So Darden, no different. That's why you get the Zacks rank of hold here. Now, also looking at another thing that I think people get confused about with the Zacks ranks is that just because it's a rank number 1 doesn't mean the stock is going to go up. It's like not a guarantee of, it has this number 1 rank and it's a strong buy. It's going to be a winner. Hopefully it is. And usually something good is going on with the company to get that rank. So hopefully you have some upward momentum in the shares, but it doesn't always mean it's going to go up. And same thing with the Zacks number 5 strong sells. Those don't always mean they're going to go down either. I tried to find a Zacks number 5 that was like among the FANGs or maybe one of the hot restaurant stocks, because some of them have been with the lower Zacks rank in the last month or two because of the earnings estimates being cut under the coronavirus crisis here. But now they've all kind of stabilized. They're all back to the number 3s. Like I said, the airlines, the cruise ships, those ones are all back to 3s. Darden, by the way, as a number 3 right here is up 8.7% in the last month, the shares, but still down 25% year to date. So keep in mind that Zacks rank number 1 doesn't mean all-time highs necessarily. I looked up Apple and I see that one is a Zacks rank number 2 right now. It is at all-time highs. So it is coordinating with the rank pretty well on that one. But I use the rank again to find these hidden gems. And right now, when so many estimates are being cut, so many companies are withdrawing their earnings guidance, and we don't have any idea really what's going to happen with earnings revenue, maybe more than a week out or not even, that the rank can at least tell you where some bullishness is, what companies are seeing rising earnings estimates, even if it's not earnings growth year over year. But right now in 2020, the analysts are raising for the year, and that says something because it's being cut for so many others. So you can use it to screen for those hidden gems. And I do encourage you to try it out and try to use it. Now, if you're on Zacks.com and you're just kind of going over there to check out everything, you can get a free Zacks number 1 rank stock every day, Monday through Friday. There's a new one on there, and that's called the Bull of the Day. It's right on the home page. If you scroll down a little bit, you'll see it listed there. Those are almost always Zacks number 1 ranks, although occasionally we'll do a Zacks number 2 in there. And you'll also see the Bear of the Day there. Those should be Zacks number 5 strong sells. I know no one really likes the number 5s, right? Sometimes I do find hidden gems when I'm writing my own Zacks number 5 strong sell, like the Bear of the Day. And I'm always surprised, like, wow, how am I spinning this? But yes, the estimates are usually being cut on it, but sometimes there's a good underlying story there, just FYI. So you might still find some hidden gems in the bear of the day. And remember that the rank changes daily. It is updated by the computer. So occasionally you will get the strange phenomena of a Zacks number 5, on the site, an article about one being a number 5, and then it's when you go to look, it's a 4 or even a 3. And then occasionally, over all my 12 years here, I've seen only a handful of times a stock that was a 1 or a 2 suddenly the next day go to a 5. But right now, this year in 2020, with the craziness in the earnings estimates and cuts having to happen and the suddenness of the coronavirus sell-off and all these impacts from the virus, that we're seeing a lot of volatility in the rank and a lot of changes. So always be going over there and checking it out. And also remember, just another little tidbit, earnings season is super volatile for the rank, and you will see not only leading up to earnings season, as I said, where some of these stocks drop to number 4s, but just after the earnings report is when the Zacks rank will change, when you get those analyst revisions into our system, and then suddenly it'll be a 1 or a 2 rank stock. So earnings season, a lot of fun with the Zacks rank. Right now, we're outside of earnings season to some extent, except for, some stragglers on the retail side and some of the fiscal earnings reporters. But you can still use it to find some hidden gems here as well. And some of these that are holding on to their rank from the prior quarter, like Activision Blizzard appears to be doing right now. So keep all these things in mind. But the Zacks rank is an interesting tool if you want to use it to, screen, to find those where those earnings are hopefully on the rise and maybe something good is going on there. So let me recap the stocks again I talked about in this episode. There was Activision Blizzard. It's the Zacks number 1 rank. ATVI is the ticker. Dollar General, one of the few retailers also with the number 1 rank. I think all the rest were like supermarkets right now. But Dollar General, DG. One of the banks, JP Morgan, they're going to be reporting again soon. JPM is the ticker there. They're a 3 hold. Korn Ferry, they are reporting very soon. That's why they've dropped down to that number 4, because they're about to report again. KFY, and then we had Darden, where the analysts don't know what's going on, but that's okay because no one knows right now. DRI is the ticker. And as always, every week, I'm trying to bring you as much information I can to help you invest during this crazy time, during the pandemic, and now during this rally. So be sure to subscribe to get all our episodes. I'm going to be having a couple interesting ones coming up because I feel like with this rally, we're going to need some help again to discuss why you should have an investing plan. What are your goals? What is happening if one of your stocks goes a little bit parabolic, as they like to say, or crazy? And a lot of stocks seem to be, right? Should you sell? What should you do? So that's a good problem to have. We always have the discussions on what you should do if there's a sell-off. What should you do if there's a melt up? Let's talk about that. So subscribe. We are going to have lots of interesting content. You can get us on SoundCloud. Of course, I know a lot of you are over on SoundCloud. We are on Apple Podcasts, as always, under the Market Edge name, and we're on Spotify. A whole bunch of other platforms also have us. Be sure to find us somewhere, but I will see you again next week with some more stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.